Do you want to make $100 a day trading crypto in both bull and bear markets? Well, you have found the right video. In the next few minutes, I will walk you through exactly how to set up and use Bybit futures trading. And I will also show you how you can get free bonuses the more you trade. Alright, so the very first thing we need to do before we can start trading or investing on Bybit is of course that we need to sign up. And for the sign up process, I have actually managed to get a special link from Bybit. You can find the link both in the top of the description as well as the pinned comment. And by using this link, you will get free bonuses the more you trade. And as you can see, you can actually get up to $30,000 in rewards by using this link. However, I do want to mention right away that most people will not reach $30,000. As you can see here, most people, over 80%, will win $100 or more. But not many people will reach all the way to $30,000. But alright, so after clicking on the sign up link, you should be on this page right here. And to double check that you are on the correct page, it should say Bybit X Mind Math Money here at the top. And you should also see this referral code 88512. If for some reason you can't see this code, you can type it in manually in this box. After you have made sure that you have the right number, you can either sign up here by email or you can sign up by mobile number. It doesn't really matter. So you simply type in your email right here and then you choose a password. And here it's highly recommended that you right away try to choose a strong password. And as you can see, you have some requirements here. The password should be 8 to 30 characters. It should have at least one uppercase letter, one lowercase letter, and you also need a number. All of these points is to make sure that the account is secure. And later on in this video, I will show you guys some very important steps you can take to make the account even more secure. But for now, this is all you need to create your account. After that, you will get a simple email or text message to verify. And then, just like that, your account is created. When you first log into Bybit, it should look something like this. If you instead are on another page, you can go up to your profile button right here and go down and click on Overview. This should take you to this page. Because now, in order to actually trade or invest in Bybit, you need to do something called KYC. And the KYC is a simple process that can take just around 1 minute if you follow this step-by-step guide. But first of all, what is KYC? Well, KYC is something known as Know Your Customer, and it's a process that Bybit does to improve security and to prevent fraud. So now to start our KYC, we simply click on Get Verified Now. And here for the identity verification, I think this process is actually easier to do on mobile. But you can do this on both your mobile and your desktop. When you are ready to start, you simply go down here and click on Verify. And what you need to do is that you need to do 2 steps. First of all, you need to send some type of identity card to prove your identity. So this could be a driver's license, an ID card, passport, or anything else that can prove your identity. I think the alternatives here will differ a bit depending on your country, but I'm from Sweden here, so I can choose between driver's license, ID card, and so on and so on. And then after this, you will need to prove that you are you. And this is done using a simple facial recognition process. As I already said, I think this one is easier to do on camera, and what you basically do is that you simply film your face. You will get step-by-step instructions, and just like that, your profile has been verified. And to go to the futures market, you go up here to where it says trade, and then you go down here and press futures. And let's actually do that because I do want to give you guys a quick Bybit futures tutorial. And first of all, when we open the future markets, the first thing you need to know is that, as I mentioned earlier, the spot market is where you trade real crypto and the futures market is where you trade basically contracts that follow the price of crypto. I think that is the easiest way to think about it as a beginner. And here, before you watch this futures part of the video, I highly recommend that you take a look at the part about the spot market, because most things are the same. But one big difference here, and what the futures market allow you to do, is to use leverage. And you can think about leverage as a tool that will multiply your profits, but also multiply your losses. So let me actually once again hide my camera here so you can see more clearly. And first of all, as you can see right here, the trading panel is very similar to the spot market. But what you can now do is that you can choose leverage right here. So you can see right now it says 5x. That means that we will win 5 times more than normal, but we will also lose 5 times more than normal. And to change the leverage, you can go right here. You can, for example, adjust it upwards to 10x, or you can choose to drag it down to as low as 1x right here. And here, and this is very important, for beginners, I actually recommend to stick with the spot market until you get used to the platform, because when it comes to leverage, and if you don't know what you're doing, you can easily lose money. But let's begin here by using not too much leverage. Let's start by using 5x, meaning that we will lose 5 times more, but also win 5 times more. So let's choose 5x leverage right here. And let's actually start here with a simple market order. So we currently have 5x leverage. And let's say that we wanna, use all our money. So we choose 100% right here. And what you can see is that even though, remember, we only have like $90 US, you can see that now the order value will be more. And this is because we are using leverage. We can also, if we want to, by checking this box right here, we can set an automatic take profit and stop loss level. So right now the price is at around 95,630. So let's say we want to set an automatic stop loss, price target at $100,000. So if the price reaches $100,000, we will automatically lock in profit. And let's say that we want to set our stop loss at 90,000. So if the price goes down to 90,000, we will automatically sell the position. Then when we are ready here, we can click buy/long. And before we continue here, I want to talk about this window, because this is very important. Because here you can see all the information about the order, and the most important part you need to take a look at is this part right here. This is the estimated liquidation price. And this value shows the price at which your position will be automatically liquidated, or in other words, automatically sold. So even if we didn't use a stop loss for this position, we would automatically be forced to sell here if the price went down to 74,200. So when you are trading using futures, always make sure to double check this liquidation price. And another thing I have to mention is that in this case, we set our stop loss at 90,000. So in this case, we will automatically sell above the 74,000 point. But let's say that we have done our analysis, and let's say that we set our stop loss at 60,000. In this case, our stop loss would not matter because the liquidation price is above 60,000. So always make sure that you have your stop loss above the liquidation price. If your stop loss is below, that means that you need to, change the leverage and change the estimated liquidation price. So always, guys, make sure to double check the liquidation price. Also double check that the take profit and stop loss is correct. And when you are ready, you can click confirm right here. Now, as you can see, this order failed because I waited for too long. So let's do it again. Buy long. We double check the estimated liquidation price, and we click confirm right here. And just like that, our future position is now live in the market. And here on the chart, you can now see that our take profit is at 100,000, our stop loss at 90,000. And here you can see our current profit or loss of the position. And now to check your futures position, you can just scroll down right here. And as you can see, we have right here on the positions tab, we have the position. You can see everything you need to know. You can see the leverage. You can see the liquidation price right here. And as you can see right here, you can see the profit or loss. What you will also notice here is that when you go to open orders right here, you can see that we have a position here as well. And this is basically our take profit and stop loss. Remember that we set a take profit at $100,000. So it will automatically sell the position if it goes up there, or if the price goes down to $90,000, we will also automatically sell. But now let's say that you for some reason don't want to be in the market anymore. You want to just get out and take either profit or loss depending on how the market has moved right here. And to do that, you simply go to position right here, and then you can see that it says to the right, it says close buy. And then we can choose between limit or market. The market order will simply close the position right now at the current price, while the limit order works in the exact same manner that we have been talking about throughout this course. You can choose a specific level. But in this case, let's just choose the market right here. Let's just close the position as it is right now. You can choose how much. Let's choose 100% and click confirm. And now we are no longer in the futures market. The position is closed. We can double check by going to assets here and see that we have the US dollar right here. But now I want to show you guys some tools that you can use if you plan to, trade. Maybe you plan to day trade, which means that you buy and sell within the same day, or maybe you plan to buy and sell within the same week. When it comes to these short to medium term trades, the by far most popular technique to use is something called technical analysis. And technical analysis is a very broad topic, and I have tons of videos on my YouTube channel where I go over some different technical analysis techniques and tools that you can use to improve your trading. But now I do want to do just a very basic guide on how you can start using technical analysis right here on Bybit. And the very first thing we want to do when we analyze the chart is that we first of all want to make the chart bigger. So to make the chart a full screen, you want to go to this button, you can see right here, where it is two arrows, and you press on this one. So just like that, we have the chart in full screen and we are ready to start doing our analysis. And before we start here, remember we are still looking at a Bitcoin chart, and right now we're actually on a weekly time frame. So every candlestick here is 1 week. But if you want to, change the time frame, maybe you are a short-term trader, you might want to go to the 5-minute chart, which means that now every candlestick on this chart will be 5 minutes instead. But let's actually begin here with the weekly time frame, because I did see some interesting things right here on the weekly. And the very first tool I want to show you guys is the tool you can find right here. So if you go up here to the upper left corner and press on what is called trendline tools, you can see that we have a few different tools. And the first tool I want to show you guys is the trend line. So to use this one, you press on trend line and then you press on one point on the chart, and then you can drag the trend line out, and then you press on another point on the chart. And just like that, you have been drawing your trend line. Now you might of course wonder, what are the main use cases for trend lines? Well, as we can hear on the name, we mainly use trend lines to draw trends. And let's actually zoom in here. Let me delete this one for now. If we zoom in on the chart at this point, one interesting thing we can notice is that during this period right here, we can see that the price printed consecutive lower highs, while at the same time we printed consecutive lower lows. So if you look here, you can see that it looks like we have a sort of a mini or short-term downtrend right on the chart. So instead of doing ugly drawings like I did right now, we can instead of course use our trend line tool. So we drag out the upper bound just like this. We use the trend line tool, and then a trick for you guys is if you want to copy this line with the exact same slope, you can press on it, you press Ctrl C, and then you press Ctrl V, and just like that you will have a trend line with the exact same slope that we drag down to the lower boundary, and you can see that just like that we have a mini sort of downtrend. And one very interesting thing you can see about the price, what happened here when the price broke the upper trend line. Well, what you can see is that after this breakout we actually saw a big move here towards the upside. So this right here could have been a good buying opportunity, right? And if we start to analyze this chart even more, we will find some more interesting things. The first thing I want to point out is that before this sort of downtrend we see right here, we actually saw a very strong move towards the upside. And this strong move towards the upside together with this sort of mini downtrend right here is actually a specific chart pattern. This right here is a chart pattern that we call a bullish flag. And the bullish flag actually indicates a continuation to the upside. So it indicates that this previous move here will continue to the upside, and that is exactly what happened right here. However, learning about chart patterns take quite some time, and on our channel I have a full chart patterns training course. So if you guys are interested in learning more about chart patterns, I highly recommend to check out that course after this video. But this was just a very simple example of how to use chart patterns, and it's very important to point out already now that not all bullish chart patterns will lead to a move towards the upside, and not all bearish chart patterns will lead to a move towards the downside. We can't predict with certainty anything with technical analysis. The best thing we can do is trying to get the odds in our favor so that we at least win more than we lose, or it will be a little bit different depending on our risk to reward ratio, but that is a bit outside the scope of this video. But now the next tool I want to show you guys is the volume tool, and what you can see here, the volume tool is actually already on the chart. It is this tool right here. You can see the green and red bars, and now you might wonder, what does these bars tell us? Well, in simple terms, the volume bars tell us how much have been traded during that specific candle. So remember, we're still looking at Bitcoin. So when we see tall bars, like for example, you see this bar right here, this means that during this specific candle, and right now we're looking at weekly candles, so it means that during that specific week, we saw many Bitcoins traded. We saw many Bitcoins changing hands, basically. While if we look at a candle with low volume, maybe some of these candles, you can see the volume was very low. That means that we didn't have a lot of trading activity during these candles. So the volume is a very useful tool in my opinion. However, I don't like the sort of blue line we have in the middle. So if you want to change the settings of the volume, you can go to this cogwheel right here where it says settings, and I personally like to uncheck the moving average of the volume because I don't really find it to be valuable. You can also customize the volume to however you want, but I like to use these sort of green and red bars just like this, so I'm gonna keep the volume like this. But just one quick thing I actually want to point out, which I'm seeing right now, or at least I think I'm seeing, if we just create that pattern once again. One interesting thing here we can see with the sort of move when we broke above this pattern, right, is that you can see that the volume increased during this period. You can see during these candles when we broke out, we actually saw increased volume, and that is actually another bullish sign, which makes it more likely that the price will continue up here. So that is one way you can use volume. In general, when we see a move happening and have lots of volume, that makes the move more significant. That is a general rule of thumb. But once again, I can't go into too much detail in this video about volume. However, I do have a full course on volume right here on the channel. So if you want to learn more about volume, just head over to that course. It's completely for free right here on YouTube. But alright, so now it's finally time for me to show you guys one of my personal favorite indicators. And I will also show you guys how you can change the settings to potentially improve the indicator even further. And to find this indicator, you want to go up to the Indicators tab, which you can find right here. And then you want to search for MACD, or for short MACD. This is a very popular indicator and it can be very useful. So let's press on the MACD right here. And as you can see, just like that, the MACD will appear here at the bottom of the screen. And here, I think the standard settings for the MACD are already good and they can definitely be used for trading. But one setting I have been experimenting with quite a bit and that I actually find lots of value in is another setting. So let me show you guys how to change the settings of the MACD here to potentially improve it, or at least make the MACD respond faster to signals. So you, once again, I can show again, you go to the settings tab down here. And then you want to head to the inputs. And the special setting I'm going to use right here has a fast length of 3. So you want to change the fast length from 12 to 3 and a slow length of 10. And the signal length here is actually 16. And here, unfortunately, it doesn't look like we can choose... No, we can't choose the moving average type. I like to actually change the moving average type from an exponential moving average to a simple moving average, but that option doesn't seem to be available here in Bybit. I know that you can do that in TradingView. So yeah, here it unfortunately doesn't look like I can show you guys the complete settings. But if you want to have a sort of better analysis platform, I highly recommend you guys to check out TradingView. And for TradingView, I actually have a special link. I will make sure to leave that link down in the description and the pinned comment. And you can use that link to try out TradingView Premium for free for 30 days. And you will also get a $15 bonus if you eventually decide to upgrade. So make sure to check out TradingView. It's a sort of more comprehensive and better analysis platform. But 3.10.16 can also work for EMA, so let's use that for now. And here there are many different use cases for MACD. When it comes to the normal MACD, I like to use it for something called divergences. But here with the 3.10.16, one thing I like to look out for here is that I look out for strong momentum spikes. So for example, right here, we had a strong spike in momentum. You can see that by looking at either the MACD line or the histogram here below. You can see we had strong momentum, which basically means that we saw a strong and fast price movement. And after these strong momentum moves, that is when I usually look out for pullbacks. A pullback is basically the move that goes in the opposite direction of the trend. So this right here is the trend, this right here is the pullback. And these sort of spikes in momentum is a sign for me to look out to trade these pullbacks. But yeah guys, once again, I don't have time to dive deep into the MACD indicator. Here on our YouTube channel, I have a full course. It's almost 1 hour where I talk about the MACD. So if you want to dive deep, I highly recommend to check that full course out. Alright guys, so now I deleted all the indicators we had on the screen so far because it was a bit cluttered. Now, last but definitely not least, I want to show you guys a very popular tool called Fibonacci Retracement. To use Fibonacci Retracement, you simply head here to the upper left corner once again and you click on this tool right here, Gann and Fibonacci tools, and then you press on Fib Retracement. And to use Fib Retracement, you press on one point on the chart and then you drag it to another point. And as you guys can see right here, when you do this, you will see multiple numbers appearing on the chart. And in the beginning, you might ask yourself, you know, what does these numbers even mean? Well, these numbers basically stand for percentages. So for example, the one right here stands for 100%. The 0.786 stands for 78.6%. The 0.618 stands for 61.8%, and so on and so on. And these percentages we can actually use to try to find better entry points and also exit points in the market. So a simple way to use the Fibonacci retracement, what you want to do, you want to make sure that you select the Fib retracement. Then you want to anchor from a swing high to swing, I mean in an uptrend, you want to anchor from a swing low to swing high. And once again, if you don't know what a swing high and swing low is, I can only direct you to watch more of my videos here on the channel to learn all about it. Here we can only do a quick guide. So swing high to swing low, then we see the retracement, and most pullbacks will actually end somewhere in this area, in between the 0.382 to 0.618. This is the most common area for the price to reverse. And no surprise here, take a look, we're exactly this price reversed. It reversed exactly at the 0.5 level. Most of the times in real markets, you will not find perfect examples like this. This was just, you know, a random example that reversed exactly at the 0.5 level. But what you will notice here is that good pullbacks often reverse somewhere in this area. So this area you can use as, you know, a level to pay attention to and a level to look out for entries. However, as with pretty much all technical analysis tools, you don't want to use, you know, only one tool and rely only on one tool. You want to combine multiple technical variables at the same time in order to make your decisions. And as always, you always want to have your risk management in check, meaning that you always need to set a stop loss, whether it's a trailing stop loss or fixed one. Make sure to set your stop loss. Make sure to also actually take profits. So make sure to set a predetermined profit target, or at least have an exit strategy. But yeah guys, this video is actually coming to an end now. I can't really dive too deep into technical analysis, but I really hope this Bybit tutorial gave a great sort of foundational understanding on how to use Bybit, and also got you a little bit interested at least in technical analysis. Before we wrap up here, I want to remind you guys that you know, if you want to earn money as you are trading on Bybit, actually up to $30,000, remember to use the link down below before you sign up. It's very important. Also guys, if you want to start using TradingView and dive deeper into technical analysis, I have a special link for that as well. As I mentioned, it will also be in the description. And last but not least guys, when you are ready to continue your trading journey, I highly recommend to check out this playlist right here. It contains all of the educational trading courses I have here on the channel. So make sure guys to start going through that playlist. But for now, take care. Ciao, ciao.